Yo, what's up, guys? Hello, hello, hello. Okay, let me pull up Visual Studio Code. Okay, so welcome to the stream. Preparing for a school club interview. So I actually have two tomorrow. For one in the morning, I guess afternoonish, one at night. I guess both afternoon, 10:30 to 12, and then one at 3:30. So it has to do with investing, and I'm hoping I can get into both of these. It'll be a fun time to spend my senior year looking at stocks, thinking about stocks, and I would really enjoy this experience. So I think what I'm going to do then is probably just run through a quick little interview scenario. Let's interview SendBits plus CPSig. Maybe talk about who I am, introduce myself, why I'm interested in the club, why I would be, what sets me apart. Okay. So I guess I'll just go off top for now and then kind of work my way through. So there's also interview reflection, Maryland interview. Alright. So start off with, tell me about yourself. I'm currently a junior studying finance and computer science. Last summer I was an intern at JP Morgan Chase on a software engineering team within the consumer bank. I was working on building a full stack website that would help monitor thousands of configurations for oh man, I'm already sneezing. Oh, okay. God damn. I gotta get my little headband. Let me see. There we go. Bald head. So, okay, let me try to think here. Currently a junior studying finance and computer science. Last summer, I was an intern at JP Morgan Chase on a software engineering team within the consumer bank. And over the course of that summer, I worked on building a full stack website to help monitor the configurations for really thousands of applications within Chase Bank. The summer before that, I was an intern at Willis Towers Watson on one of their pension benefits team. Over the course of that summer, I pretty much wrote some SQL queries to help gather data for the analysts to analyze and also help gather data for a retroactive payment data audit. At school, I've taken some classes in finance, computer science, a little bit of math. At school, taking some classes in finance, computer science, a little bit of math. In my free time, maybe at school I've been taking some classes in finance, computer science, a little bit of math. Also joined the computational finance program. That's also really interesting. At school, taken some classes in finance, computer science, a little bit of math. I was able to join the computational finance program. That's pretty interesting. Kind of combines the finance and computer science all into a single class. And in my free time, I like to skateboard. Like to dance, trying to get into running. Free time, like to skateboard. I really like to skateboard. Really enjoy dancing. Getting into running too. About to run a half marathon. And really enjoy running too. About to start running I'm going to actually run my first half marathon in DC in like 3-4 weeks. So trying to train for that. Oh yeah, okay, yeah, man. So I mean, if I'm working with students, maybe it's best to keep it casual. Maybe not keep it casual, but be friendly, be warm, I guess. I don't know how to should say it. Okay, let's start from the top again. Incorporates. I don't have to be super stiff, super tight, and just kind of go with the flow, right? Strike up a conversation. So yeah, my name is Brian. Currently a junior, studying finance and computer science. Last summer, I was an intern at JP Morgan Chase on a software engineering team within the consumer bank. So over the course of summer, I worked with a few interns and some full-time engineers building out a full-stack website that would help monitor the configurations for thousands of applications within Chase Bank. The summer before that, I was an intern at Willis Towers Watson on one of their pension teams. And so over the course of that summer, I worked on really building SQL queries to gather data for pension plan related stuff, retroactive payments, plan participant data. Okay, let me start from the top again. So over the course of that summer, I really worked closely with the analysts, wrote a lot of SQL queries to gather data they needed to analyze plan participant information, and also helped build a data audit on retroactive payments. I also helped build a data audit on retroactive payments. Yeah, I like to skateboard a lot. Okay. Yeah, at school, taking some classes in finance, computer science, a little bit of math. At school, I've taken some classes in finance, computer science, a little bit of math. I also, I also was lucky to join. I also joined the computational finance program that kind of blends both finance, mathematics, computer science all into a single course curriculum. That's been pretty interesting too. And in my free time, really like to skateboard. Uh, in my free time, I've been skateboarding a lot recently. In my free time, really like to skate. I've been dancing and getting into running recently. Actually, gonna start my first half marathon. In my free time, I like to skateboard a lot. Like to dance a little bit. Yeah. My free time, I like to skateboard a lot. Like to dance a little bit. I'm also getting into running. I'm also getting back into running. Gonna run my first half marathon in DC actually, and in like 2-3 weeks from now. Yeah. So hey, my name is Ryan. Currently a junior, studying finance and computer science. Oh man, okay. I'm blanking. Hey, my name is Brian, studying finance and computer science. A junior, studying finance and computer science. Last summer, I was an intern at JP Morgan Chase on one of their software engineering teams and the consumer bank. So over the course of that summer, just worked on building a full stack website to help monitor really thousands of configurations, for thousands of applications within Chase Bank. The summer before that, I was an intern at Willis Towers Watson on their pension benefits team. Over the course of that summer, worked with the analysts really closely to write SQL queries to gather plan participant data for them to analyze and also gather retroactive payment data for a data audit. At school, I've taken some classes in finance, computer science, a little bit of math. I also joined the computational finance program. That kind of blends both finance, computer science, math into 3 different classes, and it's been really interesting. In my free time, it's been really interesting. And it's been pretty interesting. I've been enjoying a lot, learning a lot. Kind of combines finance, computer science, math, all into 3-4 different classes. It's been pretty interesting for me. And in my free time, I really enjoy skateboarding. I like to dance a little bit, and I've been getting back into running recently. gonna run my first half marathon in DC actually in 2-3 weeks. So I've been trying to run maybe 2-3 miles every day. So trying to train for that right now. Yeah, so I remember at Deadline, have you guys ever heard of BitCamp before? Have you guys ever heard of BitCamp or been at BitCamp? Okay, I could talk about that. So, have you guys like ever been to BitCamp? Oh, shoot. Okay. So, time. All right. Tell me about a time so and so happened. I guess that's probably what I need to practice, and also maybe investments banking interview questions. Okay, maybe just go through this. And then debt to fund its operations. Yeah. Okay. All right, let's just go through kind of all of these. So let's take a look then. What are the three main financial statements? I think, to my understanding, you have your balance sheet, your income statement, and your cash flow statement. And I can kind of go through all three. So, balance sheet, people say, I think of it as kind of a snapshot of how company's doing at a certain point in time. So this has their assets, their liabilities, and the equity. Income statement is kind of how the company has performed over time. Main things I like to think about here: revenues, expenses, earnings per share, and the cash flow statement. This is really how cash is spent or earned over time. And so I believe the cash flow statement is split into three different sections. You have your operating cash flows, your investing cash flows, and financing cash flows. Operating cash flows really just how much cash is the company generating from its operations or from its business. Investing cash flows, what is the cash that's being spent on investing? So investments, usually think of capital expenditures, maybe some type of software purchase. And for financing, this is really how cash flows in and out of the company with respect to the debt holders and the equity holders. Okay, so can you explain to me how all three financial statements are connected? So I guess I could start with maybe the income statement and then try to tie everything in there. So really, from our income statement, we have revenues, expenses, and earnings. How should I do this? Okay. And usually at the bottom of our income statement, we have the idea of net income. So this is usually what people think of when, and And usually at the end of our income statement, we have net income. So this is kind of thinking of what our company is earning in revenues, subtracting all the expenses, and you get to net income. And so that kind of leads into the cash flow statement, but and that usually leads to the top line of the cash flow statement. So within the expenses of an income statement, you usually have these non-cash adjustments that you need to make in the cash flow statement. So an example of this could be depreciation or amortization. This, I think, is a pretty common one. That's an expense on your income statement, but needs to get added back to the cash flows, and needs to get added back to net income on the cash flow statement in order for you to get to operating cash flows. And then within that operating cash flow section, you also have to look at the balance sheet a little bit to kind of see the changes in your current liabilities, your current assets, and how that could factor into changes in cash flows. And so usually when we think of operating cash flows, they have to deal with current assets and current liabilities. And so some of the more common ones you'll find are inventory, receivables on the current asset side, and then payables, accounts payable on the liability side. Right, so changes in these accounts will have an effect on operating cash flows. And then from there, you could probably move on to your investing cash flows. And so one of the main things here for some companies is going to be money spent on capital expenditures. And this usually causes an increase on the asset side, specifically the plant, property, and equipment side on the balance sheet. Specifically the plant, property, and equipment account on a balance sheet. Right, okay. And so in the finances section, this is pretty important because it'll show kind of the financing aspects of a business. Usually this can get kind of complex. Just like the other sections, this can get pretty complex. You have a lot of things to think about here, whether the company is paying back debts, whether the company is actually raising money through issuing debts. Maybe it could be paying back dividends or issuing new equity, or it could be buying back treasury, or it could be buying back shares. And so these are all accounts that will show up in the financing section, and usually these accounts might impact the cash. Usually these accounts might impact the equity section of our income statement. So this will have a change usually on the retained earnings, and maybe treasury stock. Treasury stock represents kind of the accumulated stock buyback that a company has. And then finally, you can sum up the changes in these cash flows from operating, finance, and investing activities, and then you'll get to this final cash flow amount, and then you could just subtract the cash flow in the final compared to the beginning, and you kind of have this change in cash, which will affect the cash account on your balance sheet. Let's take a look here. Flows from income statement into the cash flows from operations, and income less dividends are added to retained earnings from the prior period. Balance sheet to come up with retained earnings as of the dates of the current period's balance sheet. The opening cash balance on the cash flow statement is changing working capital, change in working capital expenditures, long-term assets. Right, okay. Retained earnings, net income, depreciation, interest expense, okay. showing the performance of the company. How would a $10 increase in depreciation expense affect the three financial statements, assuming a 40% tax rate? Right, okay. So let's think about this here, right? Depreciation is going to show up as a expense on our income statement. And so this is going to be some type of operating expense. At our top line, we have revenues, and then we subtract this $10 increase in depreciation. And so then our actual earnings itself is going to be $10 less. So when I think about earnings here, I'm thinking about earnings before taxes. And so because our earnings is $10 less, then we also might have some type of tax benefit here. And so we can think about this as $10 times 0.4. So that'll give us $4, right? And so I think that's going to be $4 saved on taxes. That's going to be $4 saved on taxes, and I think that's and I think that's going to impact our cash statement later. And so what really happens then is our net income declines by $6 because we do have this $4 tax benefit. So I guess from there we can move on to our cash flow statement. So net income is less is $6 less. It's $6 less, I think. So but then we add back the $10 in then we add the $10 back of depreciation expense. And so our operating cash flows actually increased by $4. And so that would then add $4 to our cash accounts. I think maybe -6 on our retained equity, -10 on plant property and equipment. So then both accounts balance out. Yeah. Reduced by $6, depreciation is increased by 10. Net cash from operating and total cash increasing as earnings reduced by 6 due to reduction in net income. Right. Okay. Actually, okay. That's not bad. Reduction in net income flows to cash from operations. Net income reduced by $6. Depreciation increases by 10. Net increase in cash from operations by $4. Ending cash increases by 4. Okay. Walk me through the income statement. So I like to think of the income statement as kind of starting out with just revenues, and then you have different earning metrics as you walk through the top to bottom of an income statement. So from revenues, you usually have some type of cost of goods sold, and then that will lead to gross margins. From gross profit. For some companies, when you start at revenue, you also, the next earnings metrics is gross profit, which is really just your revenues minus the cost of goods sold. And then from gross profit, the next step is to really find out the operating income. So this is going to be your gross profit subtracting any operating expenses. Operating expenses that I can think of: selling, general, administrative expenses, depreciation, and amortization expenses. Maybe you could also consider research and development expenses in there as well. So from operating income, then you could consider your kind of non-operating income and non-operating expenses. So when I think of non-operating income, interest income, non-operating expenses, interest expense, there might be some extraordinary incomes or expenses that companies might generate over time. And that kind of leads you to this income before taxes. And so earnings before taxes. Then you usually have some type of tax rate, some effective tax rate that you can multiply to your earnings and then subtract that from your earnings. And then that will kind of lead you to net income. So net income is really the final earnings of a company after considering all of its expenses. And then sometimes in income statements you'll have measures of earnings per share, both in a basic and diluted sense. So what is enterprise value? Actually, is the value of an entire firm, both an equity, that is price that would be paid for the company in the event of an acquisition without a premium. Enterprise value is equal to market value of equity plus debt plus preferred stock plus minority interest minus cash. Okay. Market value of equity plus debts. So adding preferred stock, minority interest. I have no idea what minority interest is. Let's take a look. Chat GPT. What is minority interest? Also known as non-controlling interest, is a concept used in accounting and finance. It refers to the portion of a subsidiary corporation's stock that is not owned by the parent corporation. Okay. It's not directly or indirectly controlled. Okay. Accounting treatment. Minority interest is shown as a separate line item in the equity section of the balance sheet. This reflects the fact that there is a portion of the parent company doesn't own. Okay. Plus minority interest. Okay. Minus cash. Why do we subtract the cash from the calculation of enterprise value? Net debt, I guess. Okay. Cash is already part of the market cap. Oh, I see. Counting it twice. Okay. Although, why is cash double counted? Okay. Hmm. Yeah, I'm not super following this point because would you not also pay for the cash itself? I guess maybe you could subtract it, so, okay. So you could subtract EV to EBITDA. Okay. Oops. Alright. EV is over the market value of equity plus debt plus preferred stock minus cash. So let's subtract cash. What is WACC? How do you calculate it? So weighted average cost of capital. It's just a way of coming up with a discount rate for a firm. And so usually you have your debt and equity capital structure, sometimes even preferred shares. And so you kind of can think of the WACC as this weighted sum of the cost of capital for all three different types of capital sources. So first one I can think of is probably going to be your equity. So usually you have a portion of your firm that is funded through equity. And so you multiply that weight by the cost of equity. And then you can add the second part, which is going to be the debts portion of your business times the cost of debts. And then the cost of debt also has some tax benefit implications. Interest is tax deductible, so what you could do is multiply this by 1 minus the tax rate. And then you can also then add your preferred share weight times the cost of preferred shares. EBITDA. So to my understanding, EBITDA is a way of, it's just another earnings metric that some analysts use. So when I think of it, it just stands for earnings before interest, taxes, depreciation, and amortization. And so previous problem we were asked, how does the income statement look like? And so we talked about that there's revenues, gross profits, and then operating income. So I think EBITDA is kind of in between gross profits and operating income. So this is kind of all of the income and expenses generated from the firm above the operating income, except you don't include depreciation and amortization. So you would include things like selling general and administrative expenses, maybe some research and development costs, but depreciation and amortization is completely excluded. how much cash is available from operations. Oh, so how much cash is available from operations to pay interest, capex, etc. Would you be calculating enterprise value or equity value when using a multiple based on free cash flow or EBITDA? So when you're using free cash flow or EBITDA, usually you would be considering the enterprise value. So the reason is because free cash flow, you're really considering all of the cash that's available to the entire firm, so both the debt and equity holders. And EBITDA is kind of another way of thinking about some type of metric that is attributable to both debts and equity holders. Can a company have a negative book equity value? Right, I feel like it could, right? Because you could have assets that, I feel like I remember in accounting class, assets equals liabilities plus owner's equity. So if your liabilities is greater than your assets, then you're gonna have to compensate for that you're gonna have to compensate for that just by having negative equity value. Okay, okay, that's fair too. If there are large cash dividends, okay. What is typical of an LBO leverage buyout? So a firm uses high amount of debt to finance a purchase, then use the company's cash flows to pay off the debt over time. The acquired company's assets may be used as collateral. Ideally, the original debt would have been partially retired at the time exit. To magnify returns. So, internal rate of return, I think of as just the geometric mean of some type of the geometric mean. Right, so you have the idea of average return and internal rate of return, simple average versus geometric average. If the stock price inflated, you can raise such as comparable companies or multiple analysis. This is the most common method attempts to find messages. Market valuation or market cap. In this method, market value of equity. It's kind of cash flows, price value, percent transaction. This kind of cash flow, merger market comps, market valuation. Discount cash flows to this because finding an industry average multiple for your EBITDA. What is an initial public offering? For revenue. So I think accounts receivable is stuff or revenues that you've earned and haven't collected yet, so you would receive it, and that's an asset. Deferred revenue is the idea of you've already collected the earnings or cash from a revenue, but you actually haven't offered the service yet. Okay, beta is not. So we try to do market comparison with a company that's not on the market, so no beta you can do. So beta proxy, okay. Current assets minus current liabilities. If free cash flow, if net working capital increases, so let's kind of break that down here. Net working capital is kind of the difference between current assets and current liabilities. So if net working capital increases, that means your current assets increase relative to the liability. And so that means that more cash is kind of being sucked up into your working capital instead of actual cash itself. So in that case, free cash flow should decline. How can a company raise its stock price? It could lie, cheat, it could also buy back shares, it could do well, generate value for shareholders. Okay. Alright, that's interesting for now. I am so hungry. I need to go eat. So when I come back, probably think about some behavioral questions to ask myself. I feel like that's probably going to be a pretty big thing. And also kind of go over my investments pitch that I had. So yeah, I guess with that, I'll see you guys in the next stream. Bye.